I'm Madeleine Dean, Congresswoman from Pennsylvania's 4th Congressional District, and it is my honor and privilege to introduce Susan Tachau, a Pennsylvanian who has dedicated her life to improving the lives and independence for people with disabilities. Susan is a passionate leader, advocate, and mother who has fostered financing opportunities for those in need so that they have access to life-changing assistive technology. Like many in this field, Susan brings her own life experience to this passion, having raised a wonderful son, Michael, who lives with cerebral palsy. Susan navigated the difficult and often frustrating world of disability rights to help Michael live a full and independent life. And having learned how to help her own son, she has dedicated her life to sharing that knowledge with others. In 1998, Susan co-founded the Pennsylvania Assistive Technology Foundation, PATF, located right in my district in King of Prussia, and has served as its CEO since 2003. To date, PATF has offered $45 million in low-interest and no-interest loans to more than 5,000 Pennsylvanians with disabilities, enabling access to life-changing resources. Through the Financial Services Committee and the Subcommittee on Diversity and Inclusion, both of which I am a member, my staff and I have had the pleasure of working closely with Susan to promote resources for community development financial institutions serving people with disabilities. As a leading national advocate for alternative financing, Susan is a trusted source and voice for federal and state policymakers, her colleagues in the nonprofit assistance, and for families across Pennsylvania. Therefore, it is with great pleasure and pride that I introduce Susan and her lifetime service. Susan, I look forward to continuing our work together, and congratulations on receiving this well-deserved Opportunity Finance Network's prestigious Ned Gramlich Lifetime Achievement Award. Congratulations.
I am so honored to be here today and to be presented with the Ned Gramlich Award. Thank you, so kind, for your introduction, and thank you to the OFN board and my CDFI colleagues. In February, our son Michael will be 40 years old. He was born 12 weeks early in Ann Arbor, Michigan, where we lived when my husband attended law school. And by the way, Ned Gramlich was a professor at the University of Michigan at the same time, but we didn't know each other. Anyway, because of the complications that Michael experienced during his birth, he has cerebral palsy and he's a wheelchair user. And this is how I entered the disability world, a world that I was totally unfamiliar with. As Michael's mother, I've tried to make sure that he has had every opportunity to live a full and happy life. This has meant helping Michael navigate the medical system, access to assistive technology, receive a quality education, acquire accessible and affordable housing, build a community, and find employment, all things that are essential to living a good life. But there were problems. As many of you already know, people with disabilities have many extraordinary expenses that are incurred because of their disability. And these expenses often lead to higher debt-to-income ratios, which negatively affects their ability to access capital. So some personal experiences. When Michael was 1.5 years, he no longer fit in his original $50 car seat that we had bought for him. His new car seat had to provide some special support because he couldn't sit independently. The new car seat cost $3,000 and was not covered by insurance. Then when Michael was 5, we had to get an adapted vehicle that would accommodate his wheelchair. The adaptations included a lowered floor, ramp, and tie downs. And while the chassis of the vehicle only cost $15,000, the adaptations were another $20,000. Luckily, we had a condominium. And because that was the only way that we could afford to buy this car was to get a home equity loan. And by the way, at this time, the interest rate was 10%. In 1989, we moved to Philadelphia, where we live now, so that my husband could become a professor at Temple Law School. I too got a job at Temple at the Institute on Disabilities as their director of policy. Shortly after I arrived, there was an opportunity for us to apply for a federal grant under the now named Assistive Technology Act. That grant was to create an alternative financing program, a microfinancing program. And by the way, just because Congress made up this term, assistive technology is defined as any device that helps a person with a disability do the things they want to do. So, for example, assistive technology includes hearing aids that will help you communicate, a ramp that makes it possible for you to get in and out of your home, a wheelchair that makes it possible for you to navigate your community, smart home devices that allow you to turn on and off your lights or control who's at your door, and a fence for a family that has a child with autism so that that person can navigate their yard safely. Alternative financing programs, AFPs, are required to incorporate consumer control, and that means nothing about us without us and having authentic representation. And the financing models are to be more flexible than a traditional bank. The purpose of AFPs is to help people with disabilities access capital for the purchase of the assistive technology they want from the vendor they want. In order to attract partner banks and their capital, which we needed, we started a guaranteed loan fund, although we didn't have to guarantee loans for borrowers who met traditional lending standards. We kept the interest rates low, ranging from 3.5 to 4%, with no fees and with repayment terms based on the useful life of the device. The majority of these loans are unsecured, with only vehicle loans and home equity loans being secured. Several years later, we created a direct lending program, our mini loan program, for small amounts that range from $100 to $2,000. This year, we increased that threshold to $7,000, continuing with the 0% interest with no fees and repayment terms of up to 4 years. These loans are not secured. We also report the repayments to the Credit Builders Alliance, who in turn reports to Experian, TransUnion, and Equifax. And this is our way of trying to help our borrowers build positive credit. One of our borrowers, for example, is Bobby. He's in his 60s and he lives in his own apartment in Allentown, Pennsylvania. Bobby has an intellectual disability. And as he has aged, he finds walking to be more difficult. So his doctor told him, why don't you go and get a scooter? He applied through his insurance companies, and both Medicare and Medicaid denied his request because he can walk, if only in his own home. So the other issue Bobby had is he has no credit scores. So we were able to extend a loan for $2,000 and $41.67 for 48 months. After Bobby bought his scooter, he wrote and told us, I do not drive, and this scooter is the only transportation I have to get to stores, doctor's appointments, and visit friends. Without a scooter, I would rarely leave my apartment and I would lose my independence. In 2012, we were introduced to the world of CDFIs, and later that year, we were certified. We were welcomed into the OFN network shortly after Lisa Mensah joined OFN as president and CEO, and we have learned much from our CDFI colleagues and have expanded our products and services as well. This past January, we incorporated the Appalachian Assistive Technology Loan Fund, and now we're awaiting CDFI certification for that organization as well. We hope that within a year, we'll be able to extend consumer loans to people who live in the Appalachian region where there isn't an AFP so that they too can get the assistive technology they want. We continue to intertwine aspects of our AFP work with that of our CDFI work. We tell people about other funding resources, and we have created the first fully accessible financial education curriculum for people with disabilities called Sense and Sensibility, A Guide to Money Management. We wrote this book and created our companion website to provide information that's relevant to people with disabilities. For example, information about Social Security work incentives and saving safely with an ABLE account, and so forth. As all of you probably agree with me, financial education is absolutely key to helping people with disabilities participate in financial decision-making. So what's our impact? Like, what have we done? Since 1998, PATF has extended more than 4,300 loans, consumer loans, worth more than $44 million to people with disabilities and older Pennsylvanians for assistive technology. We've helped another 11,000 people find funding through grants so that a loan wasn't necessary. Our default rate has never been greater than 2%, and that includes people who die. For example, one of our borrowers died in July, and she was 106. She was 2 months shy of completing her loan payments for her hearing aids. Our default rate is low because, as I already mentioned, we know the importance of assistive technology to our borrowers. And we do what you do as CDFIs. We get to know our borrowers, they get to know us, and we're evaluating the situation beyond credit scores. So what's my call to my fellow CDFIs? We at PATF created these programs to reflect the realities that people with disabilities face today. We know that most people with disabilities are underemployed or unemployed more than people without disabilities. Those who are unemployed are usually surviving on supplemental security income, SSI, which is approximately $780 a month in Pennsylvania, or Social Security Disability Income, SSDI. The average in Pennsylvania is $1,258, to be precise, a month. And more people, we also know, with disabilities are unbanked or underbanked compared to people without disabilities. So the disability community includes all of us. There are more than 60 million people living with disabilities in the United States. And I suspect most of you know someone who has a disability, someone who has cerebral palsy, or is blind, or is hard of hearing, or has MS or ALS, or a spinal cord injury, someone who has an intellectual disability or a brain injury. The disability community intersects with all communities, Black, Indigenous, people of color, as well as the LGBTQ+ community. And the disability community deserves opportunity and investment. People with disabilities must be included in all of our initiatives that address diversity, equity, and inclusion. And people with disabilities must be included across the multiple sectors of our CDFI industry in consumer lending, small business lending, housing, facility lending, and more. And I'm challenging you to do more. Be truly inclusive and bring people with disabilities into your community. The Civil Rights Act of 1964 banned discrimination based on race, religion, gender, and national origin. It took 26 more years before the Americans with Disabilities Act, ADA, to be passed, which banned discrimination based on disability. We need to ensure that people with disabilities are not second-class citizens when it comes to access to financial products and services. So, in order to do this, should you need help or support or just camaraderie, please join us at the National Disability Finance Coalition. We can help you better understand the culture, the community, and provide you with the most up-to-date resources. And we're here to help you build programs that are inclusive of people with disabilities. So, in closing, I want to say and remind you that I am truly grateful, deeply grateful for this award. This award says to me that the disability community is being heard and getting recognized. This award tells me, and by the way, the amazing staff at PATF that I work with, that our work is important and that it's making a difference. I thank you to the OFM board and to my CDFI colleagues across the industry. All of you know what I know, that when you find your purpose and your passion, we stay the course and we make the world a better place. Thank you.